The Bitcoin breakdown right now is not a crash. What we're seeing in the price action actually is a beautiful breakout of the downtrend that we're seeing through this zone right here, a revisit back to the point, the scene of the crime right here, this previous range top on this very small range right here. You see, once the price action breaks a little bit below this, maybe it gets a little scary, but remember, fear tends to be one of the best buy signals in this market because most people tend to get it wrong. In fact, if this does come down a little bit lower, 108, 108.8, 108.9, I think to me, that would be a great buy signal for me. You have to do what you're going to do. But if this does revisit a little bit lower and test into the bottom side of this range, 107 or below, I think it just becomes a better and better buy, especially with some of the signals that are flashing right now. Case in point being right here, the rate cuts are locked in. The labor market is showing a lot of signs of weakness. That's one of the mandates of the Fed. And then, of course, beyond that, we are also seeing this right here, the 3-month Treasury yield officially signaling that rate cut is coming. And this is exactly what we're seeing right here. The drop in this line is that 3-month Treasury yield, always signaling before that rate cut, which is a stair step in the green line. We're seeing the drop right now. Rate cuts locked in. I think the markets are going to respond in the near term bullishly going into the FOMC. Everybody hit the like button, hit the subscribe button, ding the bell. We're about to dive into this. We got some monster signals suggesting that we're going to see a lot of upside from here going into the end of the year. So let's get it. As you roll in, make sure you drop a GM in the chat. Let me know what city you are tuning in from. So for me, it is GM Atlanta. Shout out to everybody that's tuned in from YouTube, from Rumble, from X. Big love to each and every single one of you. We're about to get into this. We got some monster signals suggesting we might see some very, very bullish price action in the near term. So let's make sure we're staying tuned and staying on the right side of the emotional and basically fear and greed and all this stuff, because it gives a great indication about what the rest of the market's doing. And a lot of times counter trading the dummies out there in the market is what is going to render you the most profit. So everybody, let's lock this in. Let's do this together. Shout out to Brad. Bring me a higher low. Kellam, that's my daddy-o. How you doing? Pre-rich Green Day Profits. Nick. Alexandra G, how you doing? Shout out to everybody as we get this going. It's time to do it. So make sure right now, look down below this video. If you've not hit the like button, show some love. If you've not engaged in the live chat, get involved and make sure you are following whatever platform you are watching on. Now let's get it. Let's go. It's the end of the bull market, some people are claiming, because we're coming to the end of that 4-year cycle that is an absolute guaranteed top of this market. If you're on that train, I think you're going to get absolutely left behind. And we've been talking about this for weeks, if not months on this channel, especially considering what's going on with the quantitative tightening and that flip now coming into that quantitative easing time frame in the market. What that means for risk assets and the signals that we're seeing right now that are suggesting an incredible, the most incredible part of this bull run is yet to come. The question is going to be, are we going to get a bigger dip before that large pump, AKA better buying opportunities, or is this going to continue chopping sideways as we've talked about coming into September up until when we get that actual rate cut, which is basically for the most part signal coming into 2 weeks from now, when we get about 10 days, 10, 13 days, when we get that FOMC meeting. Because let's go ahead and go over some of the things we're seeing, because we got some monster signals. And I see everybody getting active in the live chat. Where is let me move this over here so I can see that live chat as well. Pop out. Man, guys, I'm loving this new studio. I can't wait to get up everything that we have that's going to go on the walls, because it's going to create such a nice backdrop. I got some meta that's going to be sort of imbued in the backdrop when you see it. It'll be curious to see when you guys see it. Newizzle says Kelly TA Alpha. Shout out to everybody that's tuned in here. And by the way, I just want to let you know how much I appreciate coming and being on stream with you all on a daily basis over the last many years, not only here on the BitLab channel that I started and have been hosting for years, but also the many other platforms that I host and engage on, especially even the text-based stuff like X, and especially for those of you that are in our Discord. That link is pinned in the top of the live chat right there. If you're watching on Rumble or on Rumble or YouTube, you will see that link up there. We also have channel partners like Arculus. Make sure you protect your crypto so you can protect your future. Head over to getarculus.com. Use code BitLab20, and that's the numbers 20 BitLab20 for 20% off your best crypto cold storage solution there is out there. Now let's get into it, because as I just highlighted at the beginning of the stream, rate cuts are locked in. Now, is this just a claim? Is this just hopium? Well, let's look at the data. Two of the mandates of the Fed, Jerome Powell, case in point here. Why haven't they cut? Because they've been tackling inflation being one of those mandates. But the other thing is the labor market, these things that affect the economy. And we saw this information drop this morning, non-farm employment change. Look at this, the actual 54,000. The forecast was 73,000, and last time this data came out was 106. So nearly half as many jobs, and also way under expectations here from the forecast. So this gives rise more indication on the labor side of Jerome Powell incentivizing to actually get those rate cuts locked in. We also see unemployment claims here, 237, higher than the forecast of 230, and also larger than the previous reporting. And of course, revised non-farm productivity is also higher. So we're seeing a couple things across the board that are suggesting these rate cuts are locked in. And it's not just this labor data, but we're also seeing on this chart, which I shared yesterday as well, but we're seeing right here, the 3-month treasury yield, this sort of choppy line here. And then you see the effective fund rates. And that is when they're increasing rate, and it's been flat because they have paused. And now what we've seen as the predecessor of every rate drop is the 3-month treasury yields drop. And then what do you see? The rate cuts also, boom, fall. The 3-month treasury yields drop. And then what do we see? Rate cuts drop. And then yet again, everything's been flat. And so there's been some argument, why would they cut rates? But we're seeing several different data indications that have proven to be a great signal for getting those rate cuts locked in. And this is why we're starting to see a little bit more positive sentiment in terms of the long-term players, the big money players in this market, about what's coming in the next couple weeks. But why do we see the price action falling? Sometimes when you have bullish news in the market, whether it's for stocks or Bitcoin and the crypto assets that you're all degening into, myself included, we see a bullish setup that is basically aligning itself to play out. Market makers, big money players, and other speculators in the space will actually move price in the opposite direction first to get better opportunities, trigger fear, to get a better setup for those longs to be put in. Unfortunately, the smart money takes advantage of this movement and buys the fear. The whole goal here is to shake people out of their positions to get the best possible buy price in the charts. And it could be for Bitcoin, could be for the S&P 500. In this case, let's go down to the 4-hour. We see the S&P 500 is actually up on the day, still with the slightly bearish setup here, arcing over here with bearish divergence coming in. So we're still seeing some conflicting signals in the sort of general sentiment of the markets, not crypto market, not Bitcoin, not stocks, but the broader markets. When we're looking at what the risk on or risk off narrative is, people preparing for what may be coming. There is some question here. Now, while the S&P 500 is pushing up today, do note that when you look at things like NVIDIA, this is a little concerning, mind you. NVIDIA's, look at this rounding top. When do you guys recognize this? Does anybody remember what this looks like right here, this price action? To me, this looks like when you look at Bitcoin back in 2021, 2022, zooming back right here, this is what it looks like to me. You see this price action arcing over right here before you had a pretty substantial fall. Well, coming back over, let's go back over to NVIDIA and realize how similar that price action is. Now coming over here, okay, looking at that, okay, rounding out, are we going to get a little bit more of a drop before the price action actually continues to the upside? Or is the bull market completely over and we're all just bullish and on hopium? Well, rate cuts are coming. And while that may be near-term bullish, do understand that historically, once you start getting that switch from quantitative tightening, which we've had, back to quantitative easing, on the one hand, yes, it means more money is going to be available in markets. On the other hand, it tends to happen when there's something breaking in the economy. There's something breaking in the data that will limit people's investor confidence over a longer period of time. So it tends to be it has tended to be a predecessor to a bit of a market downturn. So the question here is going to be, does basically the US debt that's increased by $1.1 trillion in the last 2 months, whereas up until 1981, it took 205 years for the US debt to even reach $1 trillion. And now we're at the point where we accrue an additional $1 trillion on the debt. We're up over $37 trillion, and we've accrued that additional $1 trillion, 1.1 trillion in the last 2 months. Now, the reason why I find this bullish, as despicable as it is because there's nothing the US can do other than having a major component of the plan moving forward to continue printing money and also printing larger amounts than they have before, unless the entire US culture, the economy, the monetary policy takes a very responsible pill and we say we gotta have to live hard for a while and budget. But we know that's not what our politicians do. They basically, if they want to stay in office, they got to continue basically applying pressure to the symptom, not the problem. And so money printing is coming, in my opinion. So although the markets are feeling a little bit choppy right now, they're feeling a little concerned, especially coming into QT, especially looking at NVIDIA, the largest company in the history of the world, $4.4 trillion, has probably dropped a little bit since then, larger than the GDP of Canada. This will be a pretty big impact on the broader market if NVIDIA does drop down. Now, Kelly, why are we talking about NVIDIA? Why are we talking about S&P 500? Why aren't we talking about Bitcoin and our favorite coins like SUI and XLM and XRP and Tau and Injective? Because all of these things are going to be basically secondary to what the risk on, risk off narrative is as it relates to the broader markets. Okay, especially right now when the world just opened up in a different way, in a more, I don't want to say inclusive, but open way to Bitcoin and the blockchain ecosystem. So on the one hand, we've got corporate treasury companies stacking Bitcoin like mad, Bitcoin and Bitcoin proxies like MicroStrategy, Metaplanet, so on and so forth. We also have a SharpLink and Bitmain, these Ethereum treasury companies. We even have Chainlink treasury companies that are coming out. We have treasury companies for Doge, also treasury companies for Dog, the Bitcoin meme coin. The world is opening up to these assets. So while that's happening, consider that the money that is opening up to the crypto ecosystem, and especially if we come over here and look at like the total three, or come over here and look at total, which is everything in the crypto market, realize as the world is opening up to crypto, that also means a substantial amount of money coming into crypto now is going to be institutional funds, capital from Wall Street and other major players, as well as traditional finance legacy sort of market-minded people. So if there's a risk on or risk off narrative that is playing into the traditional markets, it very likely is going to have a stronger impact coming into crypto, because crypto has smaller market caps than some of these major global commodities and large securities out there that they've been investing in and trading and basically speculating on for the last 150, 200 years. So traditional strategies are starting to become more impactful in the crypto market. So while we're looking at this and we realize rate cuts are locked in, oh my God, it should be very bullish. I do think this at minimum is going to be bullish in the near term. That may not mean today, but I do think coming into the FOMC meeting, especially when we get the rate cut, I think we're going to see some bullish movement in the price action and the charts. Now, continuing on, we also see, oh my God, it's going to get political. Well, it's unfortunately gotten political on a bastardized nonsense way from people like Elizabeth Warren, who has been case in point, #1 chief. So Bitcoin and crypto's bad because I'm dumb and I don't understand it and I'm paid by the banks. Essentially was what's going on. And then what do we see in September 16th, 2024? The Fed must cut rates by 75 basis points. On September 18th, the Fed cut rates by 50 basis points. So Elizabeth Warren meddling in the affairs of the Fed. But now let's see what she says now that she doesn't like the administration. Well, Elizabeth Warren, September 4th of this year, to Stephen Moran says, "What are you doing by pushing for lower rates? This will take an axe to the Fed's independence." Shut the mother F up, you dumb. I can't even spell it. It's a 4-letter word, starts with C, ends with T. But I'm so over the political nonsense and basically meddling on the one hand for the good of the administration because you like the guy in charge. And now if somebody else is in charge, he's bad. I cannot believe he's doing what I did only last year. This is just nonsense to me. That's also one of the reasons why I'm so heavily invested in Bitcoin and the crypto market, because it's ushering in the new era. Okay. The new era is outside of the system for now, but it's very quickly getting co-opted and integrated into the legacy system. Now, continuing on, what we got, look at this. The gold M2 versus the Bitcoin price, and the gold versus basically the Bitcoin performance. If Bitcoin's lagged M2 and gold correlations, if they hold, then the rest of the year could be very interesting. So what we've seen is the global M2, and then now the gold pricing. Global M2, the money in the world, the liquidity out there in markets. We're seeing this has very heavily been the magnet either to the upside or the magnet to the downside. And we're seeing a massive increase in global liquidity. This would suggest, based on almost the lifetime of Bitcoin, that we still have a huge amount of upside left in the Bitcoin and also, larger part, the crypto markets going into the end of this year. This is what we're seeing, but it's not just the global liquidity. We're also seeing gold versus Bitcoin performance. This is, a little looser on the correlation, but one of the things I would argue here is that because gold has been pushing up so, incredibly, there's been a bit of a flight out of the traditional system. Now, gold is part of the traditional system, yes, but it's one of those risk on, risk off hedges, but it's also, we're seeing like places like China, places like Turkey, the world over has been moving a large amount of investment share and treasury share, for instance, into gold. Gold breaking up into the $3,700 an ounce. It's crazy. And Bitcoin is kind of lagging behind here as the big money players and governments and institutions and corporations are all waking up to Bitcoin. I think we're going to start to see, this sort of pressure to the upside, not only from global liquidity, but also from gold really pulling price higher. This does not even consider the fact that Bitcoin has a limited cap supply, has a limited amount of new supply daily that's already exponentially getting eaten up by corporate stacking, ETF stacking, long-term holders, OG Bitcoiners stacking, just the Bitcoin holders that have been in the market, those legacy OG players that have been in Bitcoin for 10 years, just those wallet addresses are basically buying and accumulating more Bitcoin per day than are created. Right now, about 450 Bitcoin a day are created. Just OG Bitcoiners are buying more than that. That doesn't even mention ETFs, corporate treasuries. All these guys. Stop being so worried about the 1 hour, 4 hour daily, or even weekly price. Look for opportunities to stack because the data says up from here on the macro. So let's get to stacking, everybody. Now, getting into this, what else we got? Historically, this is that correlation with gold. Gold leads Bitcoin breakouts. The higher gold goes, the more catching up Bitcoin will do. So we've got two different charts, different analysts back to back, and also the data on our side that suggests higher stack. Now, you can only choose what you're going to do. You could take the profitable pill, which is stacking in patience, or you could take the fear pill, and every time the price moves, you chop in and out and never know what the hell you're doing, and you end up at the end holding your pockets. You know, you got the pocket hanging out going here saying, you know, hold my pocket, you know. Don't do that. Don't do that. Do not subjugate yourself to being victim of the whims of the market makers triggering your hope and fear. And then we got this. Check this out. This is from Decode. And we see it's finally here. The MTO is officially flipped green. Green in all modes and most visible in line view. Shown here in the Bitcoin mode. Now, here we got, similar to the 2017 flip where it went sideways for a bit before higher, next month or two, critical for confirmation. Send it. And what are we seeing here? Look at this. From red, flips green here, a little retest, then pop. Look at where this was in the cycle. Look at how much more upside was there. Again, flip to green. Look at where this was. Price was sideways, and then the parabola came after. And look at this. We just popped above into the green. Very similar with the little drawdown, too. A little curve here. Very similar. And we've been talking about this for the last 2 years, how this would likely be much more similar to the 2017 cycle. I think the biggest difference here is that I do think this is extended. I think we're going to extend beyond this 4-year narrative. In fact, I think, and I've said this before, that we will get a bit of a pullback into the end of the year at some point. And everybody goes, see the 4-year cycle again. Then they're going to be left holding nothing in their portfolio, waiting for a big drop that never comes. Now, is 20% a big drop to you? In stocks, yeah. In crypto, no. Is 30% a big drop? In stocks, yeah. In crypto, no. And what I'm talking about here is when people sell this year, considering that there's going to be the 4-year cycle and the top's supposed to be in October or November, and then they're waiting on a 65, 70, 80% drop that never comes, and they end up, back in the same position they were before they got in the markets, just stuck in the dollar that gets devalued over time. And we're seeing the flippening here, AKA when we go into all systems go mode, just triggered. And yet people are looking at the price action on the near term going, but Bitcoin's in a downtrend on the 1 hour. Oh my God, it's crashing. It's over. No, it's providing you opportunity if you're paying attention. So let's pay attention and make sure that we are getting and staying on the right side of this trade. Now, then we also got this. The big move has not yet happened, guys. Bitcoin is coming to an inflection point. The inflection point of this cycle, just like the last chart we just saw, flipping into that all systems go. Let's go for what's the word I'm looking for? Acceleration mode. Embrace the volatility. What we've seen here is a short-term holder SOPR, spent output profit ratio. Basically, when you sell or buy, is it in profit or loss? That's what that is essentially. So what we see here, massive move to the upside in terms of how much profits were there, and it's gotten lower, and even on the losses, a lot of losses, less losses. We're getting a compression right now, coming into the point where there's so many things coming right now in this moment. We have the FOMC meeting where we're likely going to get rate cuts. We have the potential into the 4-year cycle. We also have the price action. And isn't it high at 125? That was the top. No, I think we're about to see one of the biggest shakeouts in history for people that have believed, but now are starting to doubt themselves. We're about to see the rubber hit the road for those people out there that have conviction in this market, because I think this is going to break this trend and see a much larger move to the upside here as price action does accelerate to the upside. And why would this be? Well, we see the SEC just said that U.S. exchanges, this does not mean Bybit and Binance and Coinbase and Crypto.com, NASDAQ, the CME, basically traditional assets where you're trading stocks, they can now offer Bitcoin ETFs. And we're seeing massive things from this. $130 billion VanEck just said that the New York Stock Exchange, NASDAQ, and the CME will start trading Bitcoin and crypto soon. So on the same, basically within the last 2 or 3 days, we have Ondo bringing 100 plus different securities and different assets, like Apple and Nvidia, and 100 plus different assets on chain that can be traded in the crypto market on global markets. And now we also have the SEC saying that Bitcoin and crypto are going to be traded in the multi-trillion-dollar traditional stock markets. we're seeing the merging of access of tens and hundreds of trillions of dollars in trading that happen between the two different sectors, crypto and stocks. It's all blending into the globalized blockchain world. And people are worried here. I don't care if the price drops 60% from here. The landscape moving forward screams, you better be sucking, or otherwise you're going to be so mad at yourself. Fade and TradFi, Solana, baby. Granny's Garden, how you doing? Chipper, Lee, Roy, M49, T. Owen, Boogaloo Bomb, Morning KK, and GG, how you doing? Hefe, how you doing? We got the homies in here. Michael Carter, H-bar to $1.22. Let's look at H-bar. We haven't looked at H-bar in a minute, but we're going to look at one more thing. This goes back to the stacking, the opening, the capital channels, the awareness. Publicly traded companies now officially hold over 1 million Bitcoin for the first time in history. I am going to make a different video on this because I think this is fantastic. But what I'd like to see also is the metric of how much Bitcoin in representation is held also. What the hell are you talking about, Kelly? I'm talking about different companies, corporations, governments, pension funds, so on and so forth, that own Bitcoin proxies like MicroStrategy, like SharpLink, that's obviously Ethereum, but different crypto proxies. I'm curious how much is held through those proxies as well, because it's going to be a lot higher than this. It's going to be, it's going to make this number a lot higher in terms of how much crypto exposure publicly traded, companies have. We're only just getting started. That's the crazy part. And then we see $4.3 trillion State Street, one of the major players out there, just disclosed holding $1.8 billion worth of Bitcoin. Look at that. What was I just talking about? Through MSTR, which is strategy, MicroStrategy, right? We're going to see the floodgates are literally in process of opening, and people are worried at these levels. When we're seeing stories like this, when we're seeing stories like this, and you see price action going down, you should be thanking your lucky stars that the future of the blockchain, Bitcoin, crypto ecosystem is only exploding in possibility. And yet we're seeing this opportunity, AKA price moving down. When you understand the landscape and how it's changed and what is opening up for the future, this is so much more of a gift than you can even understand. And when you realize that, then you're going to win in this market. That's just the bottom line. So what do we see? What's in the near term? What do we got? Let's get into some TA. Let's talk about it. I want to know, everybody in the live chat right now, we got 1,742 people watching. But Kelly, I'm watching on YouTube. It only says, I don't even know what. Let me look. Why does it say I'm signed out? Hopefully I'm not signed out. Let me sign back in. Hopefully my stream is still going. Oh, hold on a second. My data is not there because it signed me out for some reason. Viewer activity, let's see, analytics. Okay, we got 296 people on YouTube, but we have 1,746 between YouTube, X, and Rumble. So shout out to everybody that's tuned in. I want to ask you right now, personal favor, just put your hand on your heart. Tell yourself you're grateful for yourself. Forgive yourself for that stupid thing you said to that stranger the other day. Forgive yourself for not taking action sooner in the crypto market. You didn't know, but maybe you did know and you're closed-minded. Well, learn from those things. Learn from the mistakes you've made with the people in your life that you love, your romances, your friends, your inability to love yourself effectively. We need to forgive ourselves of these so we can move forward in these markets, in life, in our relationships. Now, the other thing I'm going to ask you to do is look right below this video. Have you hit the like button? Have you hit the heart? Are you following? Are you subscribed? Get involved. We're going to keep you on the right side of the trend of happiness, but also the right side of the trend of these markets, because we've been doing it for the last several years here. We have been nailing the calls, and I'm also hopefully I can impact you in a positive way beyond just these numbers on the screen. Hopefully every single one of you, I want you to ask yourself right now, what is your exit strategy? What's your exit strategy in this market? Do you have one? If it's altcoins, I hope a good part of that exit strategy is exiting a good portion of that into Bitcoin. If it's Bitcoin, I hope you still have ways, mechanisms, and tools and strategies for you to access some of that capital liquidity, whether it's using the different DeFi opportunities and options that you can utilize to tap that liquidity and not have a taxable event, or it's actually taking some profits but not exiting entirely. Ask yourself that. If you're not asking yourself that now, you're going to fall victim to poor decisions in how you're acting in this in these charts based on hope and fear versus just acting on strategy versus reacting on emotion. Okay. Now, getting back into the data here, this price action signaled the breakdown. Although, yes, we've been talking about the pump here. We got the pump. But now in the near term, we saw this price action moving higher, RSI a bit flat, and the money flow is a bit lower. See, on this is on the 1 hour chart. You see, come on, we see the bearish divergence here. Money flow high, money flow lower. Look, price low, price high. Less money while price went higher. This was signaling some weakness. Not only that, we have the roundingness that came in. And then you've got the basically near-term sort of trend line here that it kind of pushed up, came down. Now look at this, just lost, boom, came down and formed a head and shoulders in the process. So what sort of target are we looking at? So let's draw a neckline. The neckline, I mean, from this point to this point, this bounce projecting across. And look, this is where this bounced again. And look, we broke down. We have a lower high signaling that this was really likely going to break down a bit further. So now we measure from this neckline to the top of this head and shoulders. Why do we call it head and shoulders? Look, it looks like a shoulder, a head, and a shoulder. Very simple. Sometimes people overcomplicate things. Draw the target down. This suggests, and what did we talk about at the beginning of the show? A potential move down into sub 109, which here's 108.5. And look at where this is. I did option H, which is a horizontal line, or you can do alt H if you're on PC. And but you need to make sure that you've clicked on the chart. Otherwise, you might hide the chart. So click on the chart and then do option H or alt H, and it gives you a horizontal line. So the reason I did that is so we can see on this target, does it correspond with other price action? It does. Look at where this bounced. Look where all this chop is bouncing. Okay, it bounced right about, rejected. So there's a couple caveats here. We have all these peaks up here, peak, you see, and this is about where this is bouncing. So although we do have a target down here, the landscape is looking more bullish in the near term. So this very well could be a fake out to the downside before coming back up. So people may sell somewhere in here expecting to buy at the target and then miss it, and then you end up buying higher for less. This is why you need to understand the context, the time frame, and also the data that you're looking at. So while the target does show down here, great, put a little limit order down there, but I'm not convinced we're going to go down there. If we look at the liquidation heat map, let's look at it. Let's go to the 24-hour. Okay, this shows 108.3. So let's look at the chart. Let's look at that. Look at that, 108.4. So there is a little bit of liquidity that's down there on the liquidation heat map. That's on the 24-hour chart coming down here. But we have the majority of the liquidity above us now. So we have the majority of the liquidity above us. We're getting more surety that we're going to get the rate cuts. And people think that this is guaranteed because the head and shoulders target's here, so it must go there. It might not. This is where, I mean, we have this band was already here where all of this, rejection within, rejection. We're bouncing on the very top side of this range. This is why, although you may have a target, look left on the chart. See where, okay, this was the bottom side of these ranges. What's the top side? It was already marked out. We've had it here for those that have been paying attention. So on this case, I would have had a limit order here and then also a limit order at the bottom side of this range where this target is. That way, at least you get one or the other. If you get both, then you get the average of those two, which would be right in the middle. You're limiting your exposure and limiting the risk there as well while getting the average of the best price possible. Because targets aren't guaranteed to hit. They give you a general outline. Then you look left on the chart and see where things correspond. You will be rewarded for holding tight, Red Elephant. He says, Crenny's Garden doing good today, feeling like a bear today. Feeling like a bear today. I mean, we should be feeling like a bull in these breakdown periods because if you're feeling like a bear, you're not going to take advantage of the opportunities here until we get a really large breakdown. And I would say, I mean, hold off super bull or super bear outlooks until the rate cuts and how the market responds in the 3 or 4 days, after that. But I mean, I'm still very much on the case of, higher. But let's look at some of the other stuff. Ethereum. Okay, range bound. Look at this. On the 1 hour chart, this is just range bound. Boom, 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 boom. Okay, money flow came down pretty big here. Okay, so let's zoom out a little bit. Let's look on the 8 hour. So this is Ethereum. Let's go to a cleaner chart. Ethereum, US dollar. Okay, we got a bit of a trend line I can see right here. See, this point to this point to this point to this point. If this is lost, does that mean everything's over for Ethereum? No. We still have a beautiful zone, which we already have marked out here in orange, coming into, in my opinion, this would be bullish. Coming down in here, tapping around the 4,000, bear trapping the living hell out of people, but that's not you. Taking advantage of this, coming back up, confirming it's really bearish, only to continue to the upside like that. So let's be a little bit patient here. We saw bearish divergence coming into this. See that? Higher high, price action, lower high on the money flow, lower high on the RSI. So it did show some softening. And this is kind of the de-risking of risk and risk on, risk off going into the FOMC meeting. This is a normal behavior. And then we have the price action here, bit of a, basically really forming a bit of a triangle. So I would wait to see how a little bit of this plays out. Even if this breaks to the upside, I would be a little cautious because we're seeing a lot of this, right? The fake out down, fake out up, and then continuation. Same thing. We might see a fake out up. Oh, we really tripped you. We're breaking down, only to come back to equilibrium and then have the move. So it's all about caution right now if you're actively trading. Okay. For me, I'm actively stacking. That's what I'm doing. ET the Bitcoin also shows a similar thing. We have a falling channel here. If this does pull down a little bit more, it wouldn't surprise me before coming up and making a move to the upside. But the RSI is getting reset. You see? Let's look at this right here. Option V, option V. Look at this. I'm just showing where the RSI similarly has come to these levels. Look at this on the 8 hour chart. ET the Bitcoin pair, case in point right here. When RSIs come down here and fully reset, everybody thought it was over, and that was the spring pad to go higher. Okay, RSI came up. We have bearish divergence. It's over. Price does have a bit of a pullback, comes back to a previous range. RSI resets, gives it the springboard. Boom, pops. Oh my God, bearish divergence. You see this? Bearish divergence from these points. It's higher price, but the RSI is weaker. Great. Price action has been consolidating down in a bullish pattern, a falling channel. RSI reset, boom. Are we about to get that breakout to the upside? I think we need to be a little cautious, but bullish, looking for opportunities lower if they happen between now and when those rate cuts happen here in the matter of about 12 days? Something like that. Link. I cannot believe we're getting this opportunity on Link. How integrated it is. Things that they're going to be integrated and utilizing on Swift and DTCC, and the fact that they're stacking into their reserve, the fact that, a lot of the legislation is likely going to require a good part of some of the stuff that Link is doing. And we get this price action suggesting people are not aware. Great. I want to buy when the majority is not aware. That's the most bullish thing you can do. When the fundamentals line up, when the utility, when the use case, when the adoption, and the forward-looking projection about how that utility can be deployed and what the likelihood of it is, and the price action on the 8 hour chart is breaking down, we're not going to cry about it. We're going to say, thank God, hallelujah, the world has not woken up yet. I'm stacking. Link is my biggest position right now, okay, outside of Bitcoin. So if we do get this, and we highlighted this over here on this head and shoulders, we highlighted this. What if this does drop, from this point, 20% down, sub $20, which would be down here, 19, but testing this previous range high, barring everything else, looking at Link, price moved up. What do we normally see in price action? Every asset, a move up, a little consolidation, and then a breakout. One of the things I look for regularly is a retest of that previous range high. So, oh my God, it's got a head and shoulders. It's all over for Link. No, this means you're likely going to come back. It means you're likely going to come back and test this previous range high. And then on this bounce, that gives you a lot more clarity of, is this actually going to take a steeper dive to the downside? If this bounces up, gets rejected, we have now a lower low, lower high. That's when you get a little bit worried in terms of the very near term or whatever time frame you're looking on. So Link, I'm more confident in Link. Bitcoin and Link are my two highest played convictions in this cycle, and actually into the long term of what's going on. Ethereum's right there as well, but I think Link is going to do spectacular. Aerodrome also, we had this drawn. If it breaks down from here, likely retest and continue. The question is going to be here, do we lose this golden pocket? 0.618, 0.65. The golden ratio, 61.8. How nature organizes itself, an area price tends to revisit before either moving higher or breaking down. We've revisited it. We've also in process of doing one of two things. We got potential inverse head and shoulders here, or we lose this level and come back down here into the sub $1.95 range. Remember, Coinbase is integrating the base ecosystem, and the base ecosystem DEX is Aerodrome. So this is going to lead to a huge amount of volume within the Aerodrome ecosystem. And Coinbase Ventures also did $100 million buy-in on Aerodrome last year. So this is one of the reasons why I have so much conviction in it. Let's look at Ondo. Ondo, why is it falling? Oh my God. Remember what I said 3 days ago? I talked about, okay, bullish narrative, global markets launching, but very regularly you see a buy the rumor, sell the news. This is a little bit of that. And also the state does this look any different? We're looking on the 8 hour. Does this really look any different than what we're seeing? Look, Solana dropped. Okay. Let's look at Crow dropped. Okay. Well, we see Pith drop pretty large. Okay. We see Link dropped. So is it Ondo failing their global markets launch? No. The broader market's having a little bit of a de-risking moment right now where they're either triggering you to sell or the market is actually just having a little risk-off thing going into these rate cuts. Global markets, this is one of those long-term plays. Global markets meaning they just tokenized 100 different major stocks and securities on blockchain for the rest of the world to have access to. Because you can't necessarily go and buy Apple stock or let's say NVIDIA stock, the US stock, on basically like a foreign market. Okay, they have different ways of doing it, but it's very bottlenecked and limited in the way you have access to different country markets, stock exchanges. Now on the blockchain, it's opening up that liquidity, but it doesn't mean just because it's opened up, the rest of the world all of a sudden, boom, they're actively buying on this stuff. This is setting the foundation. Setting the foundation. It's kind of like when they build a brand new neighborhood. They just built a brand new neighborhood. They set the roads. They build, they plot out the lots of where the different houses are going to be. And, as they're building them, you might wonder why is there nobody playing in the yard? They just got the plots built. They're just set the foundations for the house. You have to wait for the people to move into the houses. Now, a lot of times the development that's happening, whether it's in the housing market, as we were just talking about with neighborhoods and such, or in crypto, the foundation and the integration and the development is front running the actual utility and the projected adoption that could happen because of the better technology or the better landscape or the better locale, so on and so forth. So we're seeing everything set up and people are wondering why it's not happening now. It is happening now in front of your eyes, and yet people are getting worried on 1 hour candles having a drop. I'm buying, baby. But guys, this is what I'm seeing. I said I would look at H-bar, so let's look at H-bar. I just want to make sure I didn't get any super chats of any requests for coins. Okay, so that's it. Let's look at H-bar. Where's it at? Crypto. It's right here. I actually have an H-bar chart. Let me pull that up because I already have lines on it. H-bar, here we go. Okay. So we talked about this. And neither one of these played out. This came up. Oh, fake out. Came back down. Oh, fake out. Now it's actually breaking down. Cool. So what do we got? Let's go to the daily. So daily, this is broken down. I'll change this line now because the market sort of has shifted a bit. We've got a bit of a falling wedge here. See? So there we go. Bit of a falling wedge. We can kind of call this a bull flag, but I really wouldn't. I'd just be more interested in watching this pattern. We do have lower prices. Look at this, lower prices. What do we see on the money flow? Money flow currently has a bullish divergence, but we don't really quite have that on the RSI yet. I think the RSI is looking to travel just a little bit lower, kind of getting a reset like we saw right here. Are we going to get that somewhere over here? And in the process, set up a bullish divergence on the RSI. If this drops a little bit further, it wouldn't shock me to come down into the 20-cent range, 19 to 20-cent range, where these previous range highs are. This rejected, this rejected, this rejected. This would be a good target zone, I think, for me, so long as the market in general is looking like it's trying to rebound. Coming down into this zone for H-bar, I think would be a pretty good reversal spot. And that would also give time for the RSI to basically find its bottom. A little bit more bullish divergence is setting up. But I can't forgive myself. Only Jesus can do that. Hey, you know what? You can forgive yourself and hopefully ask for Jesus' forgiveness as well. I mean, I think we should all be praying to something that's higher than us, something that's bigger than us. If you think that you are the end all be all, you are going to fail at everything. You need to realize, I don't care if you believe in magnetism or something, it doesn't matter even the name that you're utilizing. Something needs to be bigger than you, and the good of people, the good of man, and the good of something beyond humanity. Because if you don't believe in that, then, you know, what's the purpose of anything, right? No bad deed matters. No good deed matters. It's all for nothing. Although, what the hell are you doing on this planet? It's got to be something more out there. And I hope you all believe in something. Believe in yourself, but also find belief in yourself through realizing that there's a higher power. But I love you guys. I appreciate you. Hope you have a wonderful day. Hit that like button. Show some love. Go do some kind things for people today. Don't tell anybody about it. Just be kind. And I love you. I appreciate you. Hope you all have a wonderful day. And that's all I got. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos.